What's going on, good people? Welcome back to another episode of Trading My Funded Account. Today is day number 15. It's October 31st, 2023. We made some trades today, so let's get into it. First thing we need to talk about today, let's talk about today's important levels. So yesterday's closing price is represented by this purple line up here at 33,018. So let's go ahead and talk about what happened as the market opened and how that led to our first trade of the day. So when the market opened, we initially sold off and created a flag / consolidation area where the top level of resistance was at 32,950, and then we had our lower levels of support down here at 32,890. So as we were playing around in this range, we did establish a higher low right here. So once I saw this higher low, I said, okay, let's see what this does. So it pushed up, came back up to retest resistance, but it was never able to break past this lower high that we created right here. So that pretty much acted as a resistance level for really the next 40 minutes. So once prices got rejected from there, I said, okay, we have a rejection from a previous lower high. That's a selling sign. That's a very bearish sign. You combine that with the fact that we already had an initial move to the downside to start the market off. That's telling me that the sellers are strong in the market. So that's when I started looking for my short trades. And that's pretty much what led me to trade number one. So once I saw prices break down below that higher low level, I expected for that support level to now become resistance. So I shorted as prices came back up into that level. But if we read the notes, it says I shorted here after the higher low was broken through, but shorting after the close increases my chances of success. So right here on trade one, what I did was I kind of jumped in front of the market a little bit and I shorted before this candle had an opportunity to close. And I think that right there kind of plays into the FOMO topic that I was talking about on Friday and on Monday, where you feel like the move might move without you, so you try and get in even though it might be a little bit too early. But what I've learned about trading that short trade based on the break of a higher low is that if you let that candle close, more than likely prices are going to come back and retest that resistance level that you're trying to short from. So you don't have to get in on that first candle. You can wait until it closes and then get in on the next one. So always remember that being more patient will allow you to really let your trades play out the way that they should. Because if we look at trade number one, my stop would have actually never gotten hit if I didn't close this trade out manually for a loss. But I feel like I made the right decision right here because I saw that and I recognized that I got into the market a little bit too early. So I figured instead of letting the market do whatever it's going to do, let me just get out, because I feel a lot more comfortable and a lot more at ease when I'm not in a position that I don't feel comfortable with. So I just said, you know what, let me get out of trade number one and let me wait for the close before I think about shorting this type of scenario again. So then that's pretty much what led me to trade number two. So the notes say I repeated trade number one right here once I saw a close below the higher low support level. And that's pretty much what I was aiming to do. That right there is waiting for the confirmation, and that's what I should always strive to achieve. Now on this one, my break even got hit, but that's okay. I took a good entry, and sometimes the break even will get hit. But then once prices spiked down after trade number two got hit at break even, we saw that move all the way down, but they never quite came back to the lows exactly. So I'm like, okay, if they haven't touched the lows just yet, they more than likely have a chance to come back, retest that previous higher low that I've been trying to short from on trades one and two. And then we should see a move back down to the bottom of the consolidation zone that we're trading in. So that's pretty much the idea that led me to trade number three right here. I shorted here again as prices sold off and then came back to retest the higher low one last time. And I was finally able to catch my trade right there. So all in all, net, these three trades left me in positive territory. So that's a good thing. Now we played in the range for a little bit longer after trade number three was done. And then eventually we established a higher low after we had a false breakout past the consolidation area. And that's really important. That's something I've been noticing a lot, is that whenever you're in a consolidation range, that range has a tendency to stay in that range until it's just a massive amount of volume and momentum that'll come in and actually cause that consolidation range to be broken. So a lot of times you'll get a false breakout where it looks like prices are going to break out past that level, but then you get a reversal sign. So in this scenario, we had a downward breakout, but the reversal sign was the fact that we created a higher low right here. So higher low below a consolidation zone, it doesn't necessarily guarantee that prices will come back up into that area, but it does increase the probabilities that you'll probably see some type of buying pressure back up to the top of the range. And that's pretty much what we were able to see today. And once we got back up to the top of the range, we pretty much just kept going and kept going. Almost got back to yesterday's closing price, but couldn't quite do it. Established a higher low right here. I tried to get in and participate in this movement right here, but I was just too scared because in my mind, I was waiting for prices to come back and retest this level. But also one thing that I know about a very strong uptrend is that sometimes you'll see that higher low, but it won't come back to retest it. Instead, it'll come back to retest the swing high of that higher low support area that just got formed. So in this scenario, the swing high was somewhere up here around 33,000 even. And notice how when prices spiked up on this one candle, they came back up to a high of 33,010. But then this next candle, it opened up at 998. So prices eventually came back down to retest that previous swing high. And then that's when they made the move up to YCP. So I missed out on that one, but I wasn't mad because it didn't give me exactly what I wanted. So I'm like, okay, I'll just wait for the next one. So after that, we see prices create a lower high right here that pushes prices back down below YCP, another lower high. And then eventually we broke back down below a major level of support that had been holding up for a pretty good amount of time, going all the way back to the pre-market on this red line right here. And we came all the way back, which is really interesting. Look at what we did right here. We came all the way back to retest the same level that we broke out from a little bit earlier when we were in this consolidation zone. So we came back, we tested the top of the zone for a little bit, and we bounced up. And this right here is what led me to trade number 4. Now right here, I was thinking about going long because I saw prices come back down to the previous level where the breakout occurred from. We bounced off of that level and then created a higher low. So I said, okay, that's perfect. That's exactly what I'm looking for. But what I've been learning over these past couple of weeks is that the blocky higher lows, they definitely have a higher chance of getting broken back down through, as opposed to seeing support come in and seeing buying come in at those levels and seeing prices move up. So you always want to be a little bit cautious when it comes to a blocky higher low. Now, when I say blocky, what I mean is it is technically a higher low because this high was, well, this low was higher than the low that got established before down here, right? So it's technically a higher low, but a blocky higher low looks more so like a consolidation area where you see this entire range, this 1, 2, 3, 4 candle range right here. It's more of a little micro consolidation that has a higher low sprinkled within it. So it doesn't mean that this is not a higher low. It is, but the circumstances around it just make it less likely to see follow through, because you could see follow through more than likely, but it'll probably stop at the top of that micro consolidation zone, because remember what I said earlier, a consolidation zone usually has the tendency to stay that way until major momentum comes in and causes it to actually change characteristics. So that's pretty much what led me to take the loss on trade number 4, because I went long right here expecting for that higher low to hold up and act as support based off of the bullish signs that we seen earlier. But I got to respect the fact that blocky higher lows have a higher chance of being broken through. And also, if you look at it, this right here was really just a retest of what used to be a level of support. So we came back to retest this higher low support level after we broke back through it. So now that level is acting as resistance. So once I saw this red candle right here that kind of formed, you could call it a lower high. It's not a very distinct lower high, but it's a lower high nonetheless, because the high for this candle right here was 32,991 and the high for this one was 32,985. So just a 6-point difference, but big enough to make an impact. So once I saw prices break back down below my entry price in conjunction with that lower high, I said, you know what, it doesn't make sense to just hold my trade and let it come all the way back to my stop if it does. So let me get out and just take a small loss right here. And that's pretty much what I did on 4, took a loss of around 7 points right there. And that's the biggest lesson I learned when it comes to trade number 4. Those blocky higher lows definitely have a higher chance of being broken through. So always be cautious when you're trying to trade those blocky looking higher lows. For me personally, from this day forward, I would really just prefer to skip those blocky higher lows, because it's just not worth my time to try and take that setup, because it's not the best possible setup that I could go for. So after that, after trade 4, we see prices come back. They finally retested the bottom levels of the consolidation zone from earlier in the session. And from that point forward, we see the buy-in come right back in. and then they create a higher low right here. So that's higher low number 1. We have higher low number 2 right here, and then we have higher low number 3. So higher low number 3 is what led me to my last 2 trades of the day, which were trades 5 and trade 6. So on trade 5, I went long right here as prices came back to retest the support level from the prior higher low. So that's my higher low setup right there that I'm always looking for. But the only thing here is that you really don't want to take that higher low setup if you see a lot of opposing momentum coming back into that level. So what I mean by momentum is, if you look at where we came from, the high for this candle was 33,029, and it also came back up to retest the previous higher low. So we should expect some type of resistance from that level. Now, if prices kind of meandered their way back down, and maybe they came back down to this level over the course of maybe 3, 4, or 5 candles, maybe it would be more likely that we see a strong bounce to the upside once prices reach this level of support for that higher low. But if you look at the fact that we started at 33,029 and pretty much sold off very strongly all the way back into that level, that just decreases the chances of that higher low holding up as support, at least initially when they first come into that level. So what I really want to try and avoid, and it's something I've been trying to do for really the past month and a half, so I'm still working on it, but I'm trying to avoid taking my setups when I see momentum coming into it that's momentum from the opposite side. So in scenarios like that where you see the momentum, it doesn't mean that you don't take your trade, but what you do is you just hold off on placing your order, and instead you want to gauge what the reaction is going to be when that price point comes to your level. You want to see how the market reacts. Preferably, if you are looking to go long based on that higher low support level, you want to see an immediate bounce as soon as they hit that level, because that's telling you that everybody else in the market is just as excited as you to go long right there, and that increases the chances of that uptrend working. So that's what you really want to look for. You want to wait for a good reaction. So that's what I learned on trade number 5 right there. Now on trade number 6, it says if prices ever spike back through a trade that had a good entry, you re-enter the trade. So in this scenario, I still felt pretty strongly about the uptrend because we had already established a low down here from 874. We had a few pullbacks within this overall uptrend, but the trend was still up. So I'm like, you know what? It just makes sense to go long right here, especially with the fact that we have yesterday's closing price not too far above. So that should act as a magnet that pushes prices back up to at least test this previous swing high that we made, and more than likely probably establish a new high for this entire swing that we're on right now. So that's pretty much the mindset that I had behind trade 6. The trade still looked good to me and everything still worked out. So I re-entered as prices spiked back through my entry price, and then took it back up to my scalp target about 21 points higher, which was right around the swing high for this previous push to the upside. And after that, I decided to call it a day. This market really today wasn't everything that I really wanted it to be. It was opportunity, but not as much as I thought it would be. And that's pretty surprising because usually the day before a Fed day, you have a lot of movement and a lot of action because you have people that are trying to position themselves and get ready for tomorrow's announcement at 2 o'clock so they can have a good trade or have a good position that they're trying to build up. So today was kind of surprising. So I said, you know what? For today to be what it was and for me to still come out in profitable territory, I'll take that. You know, I feel like I didn't trade my best, but I traded decent enough. You know, I saw my setups when they were there, and I took the best trades that I possibly could. When I realized that I was wrong, I got out of them. On the trades that I was right in, I held them all the way up until my profit target and didn't mess with them and didn't mess it up. So I feel like, you know, I did all right. So I'm okay with walking away with the profit that I have. I have, let's see, 109. So about 10 points in profit. Not that much, but hey, money is money. I'll take it. So really what I'm trying to do is get ready for tomorrow's Fed day. So I'm very happy that I can scrape up a little profit before tomorrow, because tomorrow is the big day. It's going to be a lot of volatility, especially after 2 o'clock once the announcement gets made by the Federal Reserve Committee. So I want to focus on back testing, but I want to go back and I want to back test some sessions from previous Fed days. So I'm going to retest maybe the past 1 or 2, maybe 2 to 3, the past Fed days, and see just what the reactions are like, kind of get a feel for what the market scenario could be like, and what opportunities might be present so that I can come into tomorrow prepared, ready to go, so I can take advantage of the volatility that I'm pretty sure will be in here tomorrow, and then just try and make good trades. So that's the plan that I have for right now. I appreciate you guys for tuning in with me today. I hope you learned a lot about these blocky higher lows and just making sure that you avoid them and just see what the reaction will be before you take that trade. And I also hope you learned a lot about not trading against opposing momentum, even if you do see your setup. So I'll be back tomorrow on November the 1st. It's a new month. Okay, the year's moving by quick, but I'll be back tomorrow ready to do it again. But until then, you guys have a good one. Take it easy. And oh yeah, don't eat too much candy either. It's not good for you.